In the first trade, we realized the profit of 49,590, around 50,000 bucks. Hey traders, welcome to the channel, The Novel Trading. I'm your trader and trainer, Mr. Goel over here. So in today's video, we are going to discuss two major trades that we have taken on the future and options on the Bank Nifty futures. Normally, we discuss one trade at a time, but these two trades were actually identical in nature. As you can see on the screen as well, they have formed exactly the same pattern, and we will decode these two trades, in which first trade was very much profitable, and we will discuss with the verified P&L as well, and the next trade was a stop loss. So in these two trades, we have acquired around 2% of our capital, and we are going to understand how did we take this trade in the markets. So as usual, we are going to discuss the 5 steps over here. First, we are going to discuss the fundamental analysis of these two trades in the market. Second, we are going to discuss technical analysis, and third, we are going to do trade psychological analysis, which is very much important. As I told you, in every video we try to discuss some aspect of the psychology that has hit in the trades that we have taken in the live market, and which psychological trigger has been the one which we have to go through to understand and to get away with the trade. Then fourth, we are going to share the verified P&L. We are going to check the exact amount of the profit and loss that we have acquired in these two trades. And last but not the least, like every other video, we have come away with a giveaway challenge questions of 500, and we are going to also discuss the giveaway challenge question as well. So in every video, we are giving giveaway challenges for your earning purposes so that you can earn and learn on the same channel, guys. Okay, so let's start with the first. We are going to understand the fundamental analysis, in which we are going to discuss the news that has happened in the market while in these 2 days, and we are going to come to this website forexfactory.com via calendar. Since I trade in the Bank Nifty, that means it is an Indian banking index over here. So while we are discussing with the banking industry, we are going to understand the fundamental and the economic data that is being released in the market on a daily basis. So on Monday, the 26th May and the 27th May are the 2 days when we have taken this trade. So if you will look on the 26th May, there was no as such important economic index or any important news. Rather, it was a USD and a GBP bank holiday. So both of the major developed countries were on holiday. The bank holiday was there. So we expected less volatility in the Indian market as well. Now, on the 27th, there was important news in the JPY and the USD, in which we were able to understand that can be a good volatility on this specific day, and we will be able to enjoy some good profits as well. But specifically told you, my expectations were reversed. What did really happen was on 26th, when there was no such news, when there was a banking holiday, there comes the huge volatility in the index, and we have actually achieved the profit on this day. While on the second day, when there was expected volatility in the market, on the basis of the fundamental analysis that we did, we had hit a stop loss. So sometimes that also happens when we are doing analysis. No doubt, whatever analysis we do, the market will always reward the logical and the reasoning and the objective traders only. So now this was the fundamental analysis that we discussed about the news in the market that was on the specific days. So let's come to the second part, the technical analysis of these two trades, and what is so much identical or what is so much similarity in these two trades that I opted the two trades to be discussed in a single video rather than one trade in a single video. So if you will look over here, let me delete this, guys, so that you can understand very well. Zoom in the chart so that you can see it very properly. So let's come to the first day, where you will understand the price over here. On the previous day, what was happening, the price was consolidating a lot, and in the opening itself, as soon as the stock market opened and the first candle made, you can see a huge rally in the market, and the market actually pushed this rally towards the upside. So it was clear from this point of view that a kind of reversal was pending in the market, because even if the market wants to continue towards the upside, before creating a new buy swing or stretching this buy swing in the market, price needed a sell swing over here. So I didn't expect that the market will go full downside. So that's why all the trades are having a risk reward of 1:3, and in the same trade as well, we did hit a target of 1:3 over here. I'll show you the risk reward signature over here as well. As you can see over here, the risk reward ratio is 1:3, and in the next trade as well. So on this day, we expected a good reversal in the market, as after the rally, we expected the price to come a little bit downside and then follow up the price action towards the upside. So what did happen next, and how I was able to take the entry properly over here is, as we can see that we were expecting a good bearish rally in the market after a good bullish rally. We were expecting that the price will create a sell swing in the market. So we needed a sell kind of confirmation where we can sell from a major resistance of the levels or the price level where the price cannot go further upside. So over here, if you will look, the price actually stopped over here. It waited for 20 minutes, as this is a 5-minute time frame over here. This is an intraday trading we are talking about. For about 20 minutes, the price actually halted on the same price levels. And exactly as soon as there was a bearish engulfing candle in this nature, we expected now the sellers are becoming dominant in the market. Now the sellers will try to take the market towards the downside. So on this probability and this entry confirmation, we actually put up a sell limit order over here, because this was done in the option charts, we actually bought a put option at the ATM prices. Now, what did happen after the entry? You can see that after creating this major bearish candle or a Marubozu candle towards the downside, the price tried to come back and mitigated my entry towards the downside. After mitigating it, you can see that the price started rallying towards the downside in a creation of lower highs and lower lows. So price started creating a lower highs and lower lows, and this is a good confirmation. While we are in the trade, there is so much hesitation going on in the brain, and even after taking the trade, if you continue to read the price action, you will get to understand the probability of the price, whether it really wants to go in your favor or against your favor. So after giving us the entry exactly at this green candle, what did happen? The price started going towards the downside. There was a little bit fear once the price created a huge of this candle, because when this candle was forming, it was a full body candle green, and in the last few seconds of this formation of the candle, in the very last minute, the price turned upside down again and tried to go towards the downside. But while this candle was forming, there was a little hesitation that the price might not give us the reversal that we were expecting. Rather, the price will try to take out upside and will try to take out this major liquidity or the stop losses of this area. But that didn't happen, and I was getting sure as soon as this candle closed below the level, this was a highly reliable trade in the market. As I was already in the trade, there is always two positions that we can do. Either we accept the stop losses that the market will not try to retrace as we expected, or after some period of time, the price is not coming in our favor, we try to break even the trade. So looking at this candle, we understood that there is no need to break even today. Rather, we just continued the trade in the same momentum. After this reversal, the next two candles were able to hold my target or were able to realize my target. Okay, and that's how we realized the gains of 49,590. This is the verified PNL, and I am sharing the link as well in the description so that you can verify it from your end as well. Let's come to the next trade. As you can see in this trade, this was a good profitable day, and the price did reverse as we expected, and exactly from the point of interest from where we expected the price to go downside. Okay, and the same analogy that I have discussed over here was used in the next day's trade as well. Now, if you will look over here, similar to the previous day like this, if you will look, the ending market or the closing market has a similar kind of consolidations over here. And after this consolidation was over, what did happen? This time, rather rallying towards the upside, the market in the opening created a huge red candle and then started rallying towards the downside over here. And the same kind of theorem or the same kind of mindset, perception, theory, subjectivity, objectivity, or ideology was used in this trade as well, that we expected a good reversal from here. Okay, after a good rally towards the downside, we expected the market to go towards the upside, and the same principles were used for the entry purposes. We needed a good confirmation that the price wants to sustain and then move towards the upside, and the price did went in our favor as well. This is what we have seen in many of your trades as well, guys, that you might have taken the trade in the right direction, but the price has gone in that direction after taking out your stop loss. Okay, so this is the day of the stop loss. Based on the same theorem, based on the same ideology that we have received the profit on the yesterday, we have received a stop loss in this area. Why did the stop loss happen? As you can see, after the price gave us a good bullish candle over here and the support sustained in the market, we expected that the price will rally towards the upside or will give us a good reversal or retracement towards the upside before going further down. So this was the expectation, and based on the candle formation, and if you will look over here, the price gave us a good doji candle in the market that has been realized over here. And we can see in the specific candle, if you want to understand the better technical analysis or the advanced technical analysis, you can compare yourself as well while you're doing the trading in the real markets. The size of the downside wick is higher or is bigger than the size of the upside wick. Okay, and this is a good analogy, or this is the good perspective. Whenever the market wants to go towards the upside, you will see the lower wicks getting bigger and bigger. That means this is the kind of a condition where you can see the buyers coming into the market and you can see the failure of the sellers. Based on this perception and the candlestick theories, we actually entered into the trade over here. We put the stop loss on the half of this candle as we expected. If there might be retracement, the price will try to move towards the upside only. But as you can see, that didn't happen. What did really happen was that the price actually rallied towards the downside once again. Okay, giving us a good kind of a break of structure towards the downside only. And you can see that what did happen, even if I put the stop loss below this level as well, the price has taken out my stop loss and then went towards the upside. Okay, so this is one of the things that many traders or professional traders are experiencing on a regular basis, that you might get an entry, you might take the entry in the right direction, but what does usually happen is that the price takes out your stop loss and then moves in the favorable direction. Okay, so this is the kind of trade in which the stop losses becomes a little bit heavy on the emotional side as well. How emotional carriage in this trade was so heavy that it was not at all acceptable in the beginner's level. But when you become an advanced trader, it becomes a very kind of objective thing, a very kind of regular thing, that the market market has certain behavior which you have to accept. The verified P&L for this trade is this. We have lost around minus 16,751.99. So this was the stop loss that we realized on this day, and I have shared the verified P&L of this as well on the description, guys. You can check it out on the description for both the profit and the loss verified P&L as well. So now we are going to discuss the third step, that is the trade psychological analysis, most of which I have already discussed with you while doing the technical analysis of these two trades, and the psychology of these two trades were a little bit different in the market. What did actually hit us is the same trade, same pattern, same analogy, or you can say a mindset or ideology has given two different results. And this is one thing which your brain is not accepting when you are at a very beginner level, or you are just getting trained for the trading itself and you're doing real life trading. This is some kind of thing that happens with all of us. If you will look over here, we are using everything same. The market created the same pattern, the rally towards the upside, the rally towards the downside. And both of days, we were right in the perception that the market wants to take the reversal, the market wants to take the reversal. But what did really happen? Based on the same references, each and everything, one trade which was expected fundamentally when on 26th May, there was GBP and USD bank holiday and no volatility was as such expected in the market. But you can see that on this day, we specifically had a good profit. But while on the next day, when there is an important news in the Japanese yen and the US dollar, a good volatility was expected and there was a high probability that we will actually win the trade, we had a stop loss. So these are the kind of psychological things that actually hampers while you're trading with the live money, when you're trading with heavy amounts. And these are the things that any trader needs to take care of while trading in the real markets. While the first trade gave us a euphoria in the market. Okay, so the word we are using over here, or the feeling we are using over here, is a euphoria. While the second trade, which had exact replica of the previous day scenario, there was just a simple twist that the price, rather than rallying upside today, was rallying towards the downside. But the whole thing was saying the market did reverse as expected over here on the technical basis part. But both trades had a different result. So because of euphoria over here, we had quite a little bit more confidence in the second trade, which had the exact same kind of scenario. But what did really happen? This is a case of overconfidence bias in the market, because one such trade in the same pattern has given us results, that never really means that you're going to get positive results on the next day as well. And there is why there is a huge requirement for you to have a good risk management in yourself. While you're following the risk management, you can see now comes the fourth step, the verified P&L, which I've already showed you. But now comes where you have to observe the P&L. In the first trade, we assumed or we realized the profit of 49,590, around 50,000 bucks we have realized over here. That means it was a good amount in the profit system. However, when we lost in the second day, when we lost in the same kind of scenario, we lost 1/3 or a very small amount, which didn't even pinch my capital. Okay, the whole loss was about 16,751 bucks. So this is the kind of scenario that you have to build in your brain, that even though you have a lot of confidence on your analysis, even though you can foretell the prices where they are going to go, never ever put or risk your money on an over risking basis just because you have some good confidence on your trades. Maybe the market do try to trap you on these kind of situations, on these kind of scenarios where it will try to replicate the situations in the next day as well. And you will think that last day or the previous trade was so much profitable because of this stuff. Now here it is as well, I'm going to become the profitable. And what mostly traders do is over risking on this part. Okay, over risking is the factor that they mostly do because of the confidence of the previous trade is being reflected on the next trade as well. Okay, so all the people that might have sold from this level as well and made some handsome profit, they would have over risk on this trade because of the same scenario, and they expected the reversal to come in the market. Though the market really did give the reversal, they were really right about the technical analysis that you have learned in your past. You were wrong about one thing, or the market will trap you based on the same scenario. So this is a trapping trade where the market did actually hit the stop losses of the early buyers in the market and then try to flow towards the upside. So never ever over risk. Try to follow your risk management as it is, and your profits should be so much big enough that even though you are hitting the stop losses, it should not matter to you, and you become so indifferent because you know whenever the profit will come, it will cover all my stop losses and will give me something additional in it. Okay guys, so this is the kind of scenario, or this is the kind of trade psychology that you have to adopt in yourself before coming live in the real markets and putting or investing or trading with the heavy money that you cannot afford to lose. The day you become the trader that you fantasize about, that you really want to become, become the consistent profitable traders. Most of the traders, if you will look in their trading journals, they will have more negatives or the more amount of negatives. Even if their winning ratio is a little bit higher, they might have 90% winning ratio. Even in some, Telegram channels, I have seen and observed that many traders are trying to give tips today and they are claiming that they're 90% times right in the market. But what you will see is that their profits are so less, even 10 pips or let's say 10 points, 20 points they try to target, while they are actually risking about 50 to 100 points in the market. That means their risk is this much while their return is this much. Okay, so kind of try to eliminate this kind of mindset from your brain. Do not fall in traps. Higher winning ratio never leads to higher profits. You need to adjust, you need to reflect yourself in the market, and you need to accept that the higher winning amount or the higher reward amount is going to give me more profits rather than winning ratio. Okay guys, so I hope you like this video. I hope you liked all the concepts that we have discussed in the video. If you have any questions, feel free to contact us on our WhatsApp number. If you have any query, you can put it in the comment section as well. Now comes the fifth step, the giveaway challenge question for 500. So today we have uploaded the previous giveaway challenge reward as well. The person who has earned the previous prize has claimed the same on the WhatsApp and we have remitted through our payment system. And next can be you, because we are giving the giveaway on a regular basis. And if you're consistent with your answers and if you're good with your answers and you are being selected, you can claim the prize on our WhatsApp number as well. Today's giveaway challenge question is this, and you are going to find it very interesting. And we are going to discuss this in the next video while revealing the name of the prize winner as well. But what you need to do to learn and earn from this channel is you have to tell me a good answer in the comment section about what is fear of giving back. How well can you describe it in the comments? And don't just answer this, try to do some research. No doubt we are going to discuss this whole psychological concept in the next video in very detail, and I'm going to tell you some good measures how to avoid this fear as well, how to counter the fear. But first you need to understand that you are the one, you may be the one who has the same fear as well. Trading is not about excelling in the technical analysis or the fundamental analysis. I can give you multiple examples, thousands of examples where I've done excellent research, excellent analysis, kind of like fundamental and the technical. But at the end, this is where you have to focus and this is where you have to get pro on. Triggers that you have right now, you need to counter them, not the above. You already know a lot of stuff. You have already watched a lot of videos. Now become the professional in yourself. Skill that amateur person who is just learning and more, and not trying to reflect yourself back in the mirror, that how you are taking the trades, how you are dealing with the stop losses, how you're doing a lot of things. So in this channel, we try to discuss this kind of stuff with the professionalism that I try to help you guys with a lot of things that you might not even recognize the same in yourselves. And I'm telling you, once you're getting rid of this thing, you are already a pro trader. Many people tell you have to do this, you have to do a lot of technical analysis, while you will not just believe that this was a just simple first bearish engulfing candle pattern that you might have learned in the basics. And we have made so much good amount on the simple setup or a simple pattern, looking at just the bearish engulfing pattern. This is what you need to do to create consistent profits in the market. This is how you need to be a trader. But most of it is hidden in this part only. You can do wonders, guys. Okay, so you might have understood the today's giveaway challenge question for 500. That is, what is fear of giving back? You need to write a good answer in the comment section, and then you need to send the screenshot on our WhatsApp number 9999494844, guys. Do not forget to subscribe and like the video, guys. And if you have any query other than the comment, you can ask in the comment section as well. Till then, sayonara. We will meet you in the next video. Do subscribe to the channel, guys, and hasta la vista.